Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic insurance, every investor's Achilles heel. For every asset class, you should be strong at something. For equity, you should be strong in selling. For real estate, you should be strong in timing. For insurance, you should be strong in buying. So, to succeed in every asset class, you need to understand where you need to be strong. Now, to be developing that strength is not easy. We believe that it is easy to develop strengths in an asset class. Every domain is different. No individual can be a master of every domain. That is where domain expertise comes into play. Over the years, especially in recent times, we have started to believe that ease of transaction will translate into domain expertise. Nothing can be farther from the truth. My entire investment experience has taught me one thing. Domain expertise and ease of transaction need not travel together. Where you have the highest ease of transaction, you actually have lowest domain expertise. And where you have the highest domain expertise, you have the lowest ease of transaction. Now to insurance. What is the typical problem every investor faces when he tries to get himself rightly insured? First, insurance is seen as too simplistic a subject. On the contrary, insurance has to have the right sophistication. It has to have the right fit. It has to suit the person for whom it is done perfectly. It has to be tailored to perfection. So, insurance is actually something which will work for a person only if it is perfect and bespoke, right? It cannot be generic. But recent years has seen a lot of oversimplification, also a lot of dilution in insurance. The reason is that insurance has a history of mis-selling. So, because you want to walk out of that mis-selling, you are trying to oversimplify everything and saying, do these 3-4 things and you will be fine. But in those 3-4 things also, there is nuance, there is domain expertise, and there is some element of detail which you need to know. Most people don't even get to see the detail because today they are looking at ease of transaction. The person providing the ease of transaction decides what you see, so he controls your front window and shows you something and convinces you that it is the best thing. Also, most of us are so obsessed with cost that we are not weighing benefit carefully. And the most important thing in insurance, which is right sizing each need, especially when there are multiple needs, is simply not happening. What is the solution to this? The solution is to have a clear domain expertise led approach to insurance. So, you should have somebody who is going to take care of all your insurance needs. It could be you, it could be your spouse, it could be an advisor, but it cannot be a faceless thing, right? The reason is simple because there should be a clear strategy for each person. Insurance should also be done strategically, it should be done meticulously, and it should address every single need. One bad purchase of a product can throw your entire insurance strategy out of gear. Also, one wrongly sized product can actually throw all your plans out of gear. Let me explain. Let's say you got a health insurance for 5 lakhs, but your requirement is 25 lakhs. So, you'll go out of pocket if there is a medical emergency like you had in COVID. Let's say you bought an auto insurance which didn't cover you against certain very important needs and you have an accident, you will go significantly out of pocket. Let's say you bought a term which did not take care of something that could happen, which is not as bad as death, but which can be very weakening in your life. That could again set you back, like a critical illness. So, the nuance is something which has to come into an insurance strategy, and it has to come in different areas. The layers are different. No doubt, you should not buy a policy which you don't need. That is just avoiding mis-selling, but that is just the basic. Beyond that, I think the needs of an insurance for us and how those needs should be met has much greater implication. We tend to ignore those implications because we think investment in other asset classes has greater priority and insurance is a lower priority. The times that we live in, I think no asset class, no investment need can be second to another. You need to prioritize and rightly prioritize every need. That is where an insurance strategy fits in. What should this strategy have? First, it should right size your need, whether it is term, whether it is health, whether it is critical illness, whether it is accident cover. Every single need should be covered. So, you should be covered from every kind of eventuality, and the cover should be adequate, right? So, you need coverage and you need adequacy, right sizing. Then you need right pricing. Now, here people are trying to be penny wise and pound foolish, I'll tell you. The difference effectively between a product sourced from an ethical advisor and a product sourced independently online is not as high as people think. For example, for some products like term, it could be varying between 5%. It's definitely not double digit, it's mid single digit. Let's say you have a health insurance policy, very similar, but when you go to other things, which are all your riders, critical insurance, you have accident insurance, you have different types of needs that you're going to get, like a motor insurance, professional indemnity, there hardly any discount, right? For somebody who is successful, who has a very wide need, a holistic need to protect himself against all sorts of contingencies, when you look at the overall portfolio, I believe that the cost will not be high. But the important thing is that the advisor should be a responsible advisor, an ethical advisor, and somebody who does it keeping only your interest in mind and is willing to take whatever he gets as a fee, which is modest. Because if you do a good job, your returns will be modest. On the other side of the table, the investor should understand the benefits of actually working with somebody like this, because you will have an insurance strategy, you should have a document which addresses all these things. You must be sure when you insure. So, you cannot be in two minds or in half action. So, you need to holistically get this right, and you need to implement it and you need to pursue it. Most importantly, when you have a strategy, it's a document that's going to guide you in your life, and it's also going to have all the milestones fixed. It's going to tell you what you need to do as you grow, and it's going to tell you when you need to do what. So, the nuance, the detail, the importance of insurance, the correctness of what you do, and the size or the right sizing of what you do are all factors which I think people are overlooking. They are trying to oversimplify, and in the process bringing themselves to a lot of risk and potential harm. In the name of saving costs, investors are putting themselves to a lot of risk and potential harm, which is clearly avoidable. It is your responsibility to identify somebody who will ethically advise you, but you need one person who is going to address all your insurance needs, ensure that there is a strategy, ensure that all the milestones are correctly followed, ensure that you don't slip in getting the right solution, right size solution, rightly timed solution, and you don't forget. If you get all this right, then your basic safety in your life will be taken care of, and you can move to investing in the other asset classes for future growth. Never take this too lightly, and that's my simple advice to you. Be adequately insured and adequately protected. You will have a peaceful life and a happy one. Thank you for watching this video.